You are now listening to The Drowsy Trader. Before we begin, would you do something for me? In the comments, tell me what time it is for you and where in the world you're listening from. I read every one, and I always wonder who's out there sharing this quiet moment. If these stories help you slow down, or reflect, or sleep a little easier, consider liking or subscribing, but only if it truly brings you peace. Now, close your eyes. Tonight, you are not yourself. You are a floor trader on Wall Street. It is October 19th, 1987. The air smells like ink and static. The tickers are flickering faster than your eyes can track. And the Dow has started to fall, quietly, then violently. Your job? To manage chaos. To keep making markets while the world forgets what they're worth. To survive, one trade at a time. This is a day of collapsing spreads and margin calls, of frozen screens, breaking voices, and losses too fast to measure. A day when faith vanishes, and you wonder what will be left at the close. But it's also a night of reflection, when the bells go silent, and you're still here, worn down but changed. Let go. Let the stillness begin. The Drowsy Trader presents Black Monday 1987, A Trader's Story. The October sky over Manhattan is low and slate-colored, still holding on to night. You wake before your alarm, stirred by something you can't name. Not dread exactly, but an edge. The kind you feel before a storm. Your apartment is cold, radiator clanking faintly, and the city sounds muted, as if waiting. You switch on the radio. It's tuned to winds, just the headlines. Tokyo dropped 14% overnight. Hong Kong was halted entirely. London's down 10% and still falling. They say it's just overseas contagion, the kind of phrase meant to keep people calm. But you've been at this long enough to know. Markets speak louder than headlines. Your coffee machine hisses. The countertop fax curls with an overnight dispatch from the back office. S&P futures are already down 30 handles before New York's even awake. Volume is spiking, and there are gaps everywhere. You circle the part that matters. Major divergence between index futures and cash. Structural pressure building. That's code for this could break. You iron your shirt. One collar point won't stay down. In the mirror you look tired but focused. You've worked sell-offs before. 82 was bad. 84 had teeth. But nothing in your gut feels like this. There's no bounce, no floor, just velocity. On the subway, you ride next to Lisa Grant from the wire desk. She's got 2 coffees and a half-folded copy of the Journal in her lap. The lead story is about the dollar weakening, but she's staring at the footnote. Bond market instability spreads to equities in Asia-Pacific region. She raises an eyebrow and says, "We've got a Japan-sized hangover, and no one's called in sick yet." When you reach the building, the guard nods without looking. The morning crew is already upstairs, earlier than usual. On the floor, the lights are low but the chatter's sharp. Phones are ringing but not in panic. It's preemptive. Everyone's trying to get ahead of something they can't quite see. Charlie Charts DeLuca is sketching trend lines in a yellow legal pad. His desk is buried under faded candlestick printouts and a chipped mug that says, "Buy weakness, sell confidence." He taps a pencil on the chart. "See this?" he says. "Right here's where the break should have stopped. But it didn't. That's not sentiment, that's structure." You nod, even if you're not sure what he means. Charlie's been around since the early 70s. He talks like every bear market is a living thing with a name and mood. He doesn't smile. He just adjusts his glasses and draws another line. Tommy Russo blows into the pit with the smell of cheap cologne and confidence. He's younger, sharper suited, and terminally optimistic. "Bought the dip in Nikkei futures last night," he says, grinning. "They'll bounce. They always bounce." You don't respond. You're watching the quote screen. The bid-ask spreads are already wider than normal, and worse, they're inconsistent. Some stocks haven't printed since yesterday's close. Others are getting crossed in pre-market, but the volumes don't match. Lisa glances at the tape. "They're pulling liquidity already," she mutters. "Before the bell? That's not just jitters. That's defensive retreat." Over at the corner post, Hank Feldstein is checking his chalkboards. He's been a floor governor since Carter was in office and knows every trader by name, badge, and tolerance for loss. "Keep the order flow clear," he barks. "And don't you dare quote size you can't fill. Not today." You walk over and check your desk blotter. Overnight index arbitrage orders, all limit sells, no buyers. You call your desk in Chicago. The CME clerk sounds exhausted. "The ARB's breaking down," he tells you. "Index futures are trading 10 points below fair. You guys are about to see it." "What about program selling?" you ask. He exhales. "Already triggering overseas. Once we open, you'll see the dominoes." This isn't a panic yet. It's a structural unwind. You hang up. That phrase again. Structural. In 1987, few people truly understood what portfolio insurance was, a new kind of hedging strategy meant to mimic stop losses via dynamic futures selling. In theory, it was supposed to reduce risk. In practice, it was gasoline. As prices fell, the programs sold more futures, and if enough people ran the same programs, the floor would become a treadmill with no brakes. You check your quote machine again. IBM is down 5 in Frankfurt trading. GE's bid is softening. Gold is ticking higher, just a little. You glance at the 10-year Treasury yield. It's not moving. That's odd. If this were just panic, bonds would be spiking. But they're not. Charlie mutters something you can't quite hear, then louder. "They're all on the same side. Everyone's hedged the same way. One misprint and the whole thing folds in." Tommy's still talking. He doesn't notice the way the floor's gone quieter. Reggie Bishop steps onto the trading floor in a stiff gray suit. He's a compliance liaison. Corporate. Doesn't belong here. He walks like he's looking for a fire exit in a building that hasn't caught fire yet. Clipboard in hand, he makes a note every time someone raises their voice. You nod politely. He says, "Just observing order flow integrity today." You want to laugh, but don't. The bell hasn't rung yet. You still have 20 minutes. But you already know, something's coming. And this time, it won't stop where it should. The bell rings at 9:30, but there's no surge. No roar, just motion. Frantic, disorganized, wrong. You expect a burst of orders, a shout, a rhythm, but what you get is hesitation, staggered quotes, and eyes darting between screens and chalkboards. Your first market order doesn't fill. That alone is unusual. But then, another one misses too. Not even a partial. The trader across from you shrugs helplessly. You lean in. "No quotes?" he grimaces. "Quotes, yes, but no real ones." That's when you notice prices are flashing, but they're not sticking. It's a hallucination of liquidity. Lisa's already on both phones. Her fingers move faster than her voice. "Yes. Still waiting. No, we don't have a bid. I know. Her free hand scribbles a price on a notepad, then crosses it out 2 seconds later. She meets your eye and whispers, "They're pulling everything." You glance at the NYSE quote screen again. The S&P 500 is down 20 points already. No bounce. That's not a dip. It's a cliff. And the futures market in Chicago? Off by another 15 below that. Index arbitrage should be snapping the two together. But it isn't. And that's when the pit starts to crack. Tommy leans over the rail, beaming. "This is the dip, boys! You wait, we're gonna bounce by lunch." He slaps a sheet of paper against the chalkboard. SPX to 250 by close. You ignore him, not out of rudeness, out of instinct. His voice doesn't match the tempo of the floor anymore. He's lagging reality. Charlie's hands are shaking as he adjusts his glasses. "That's not how arbitrage works," he mutters. "Not when the liquidity is fake." He's watching the spread between the cash S&P and the futures widen by the second. His pencil taps the desk. The program trades are panicking, but there's no one on the other side. You know what he means. Portfolio insurance was supposed to be innovation, a machine-driven defense mechanism, but all it does is sell into weakness, automatically, mechanically. And now that weakness has no counterbalance. Every hedge fund, every institution running the same strategy, they're all hitting the same sell button at the same time. A trader next to you screams into a phone, "I don't have a bid. I can't make a bid. Nobody is quoting this side." The guy on the other end is likely in Connecticut, in a carpeted office with iced coffee and abstract art on the walls. But here, on the floor, it's just chalk dust, sweat, and silence between explosions. Reggie, clipboard in hand, watches the volume on the board scroll faster than his pen. "Just need confirmation that this is within risk guidelines," he says to no one in particular. Charlie barks back, "What guidelines? There are no guidelines for this." Reggie pauses. He doesn't write that down. You reach for a client order, a stop limit sell on GE, and realize you don't know what price to place it at. The last trade was 10 minutes ago. The next one might be 8% lower. You hesitate. That's not like you. But nothing about this is familiar. Hank marches past, barking like a general. "Don't quote unless you mean it. No phantom liquidity. No fake fills. We're not the casino down the block." His voice is gravel and authority. You glance at the clock. It's only been 15 minutes. Feels like an hour. A runner rushes past with a paper ticket in hand. Physical, manual, half the terminals are overloaded. The system's already buckling. You remember the IT guy's warning last week? Something about bandwidth bottlenecks. You dismissed it at the time. Now it feels prophetic. Lisa slams down one phone and grabs another. Her voice is sharp, commanding. "You either give me a bid or you get off my line. No more ghost quoting. No more fake flow." Her notes are chaos. Lipstick marks, highlighter scribbles, scratched out symbols. But she's the only one holding the wires together. Tommy is still smiling. "They'll halt it soon," he says, trying to reassure himself. They have to. They can't let it fall like this. But there are no circuit breakers. Not in 1987. You remember the memo. The NYSE has suggested trading halts in extreme volatility. Suggested, not required. Charlie walks over, holding a printout. It's a market depth chart, or was. 10-point gaps between bids, he says quietly. That's not a market. That's a cliff face. His eyes flick to the main board. We're trading air. Another order comes in. A client with 100,000 shares to unload. Blue chip. Institutional. You try to find a block buyer. No one answers. The desk won't touch it. Even the market makers are fading. It's not just volatility now. It's dislocation. You look to Hank. He's standing in the middle of the floor. Arms crossed, face pale. Not angry. Not yelling. Just still. Watching the floor spiral. Reggie finally speaks up. "Should I notify the compliance desk at HQ?" No one responds. You realize you're sweating, not from effort, from awareness. The kind that floods in when the curtain drops. The game is changing. This isn't just a big down day. This is a failure of design. A system behaving exactly as built. And that's the problem. The Dow is down 150 points and falling faster. You hear Lisa yell, "We're flying blind!" And you feel it in your bones. The machines are running the show, and they're not slowing down. Singzhou laches. The floor doesn't scream anymore. It grinds. Orders don't come in waves. They come in bursts, out of sequence, distorted by panic. A trader yells a fill, but by the time he finishes shouting the number, the price has already moved. It's like watching a film one frame behind. Lisa is working 3 lines now, her voice frayed. "Yes, I said yes, but you don't want it now. It's already 5 points down." She hangs up and flips through her blotter. Half of the trades are mid-route, already outdated. "It's not fast enough," she mutters. "We're too slow." Tommy leans on the post, staring at the tape. "I don't get it," he says. "People should be buying. This is the discount of the decade." But he says it with less conviction now. His trades aren't filling either. He just took a long in Dow futures, and it's down another 40 points since. You glance up at the quote screen. No pattern, just chaos. Safe stocks are falling just as fast as the volatile ones. Utilities, blue chips, defensive names. None of them are spared. The selling isn't based on valuation anymore. It's mechanical, a self-reinforcing cascade. Charlie slaps a chart down in front of you. "This is what a feedback loop looks like," he says. "Portfolio insurance." His pencil traces a downward spiral. They told clients it was protection. They didn't tell them it was a kill switch. You know what he means. These insurance programs, designed by quant desks, were sold as peace of mind. Computer models that would sell index futures to hedge downside exposure, but they all work off the same triggers. As prices drop, the programs sell more. As they sell, prices drop further. And there are no real buyers to stop it. Out of the corner of your eye, you see Hank make a call. He's not using the firm line. He's using a personal line, a secure one. His brow is furrowed, hand gripping the receiver. When he hangs up, he walks to the edge of the pit and watches without blinking. Reggie is still on the floor. His clipboard is full, but he's not writing anymore. He just stands near the order window, scanning every screen with growing confusion. "Why aren't the blocks clearing?" he asks. "Where's the other side of the trade?" Charlie doesn't even answer. There is no other side. The futures market in Chicago is down triple digits. But the NYSE hasn't caught up yet. In theory, arbitrage traders are supposed to balance that, buying the cheaper futures and selling the expensive stocks, or vice versa. But the spread has blown out. No one can execute fast enough. The ARB desks have frozen. You remember what a trader said earlier, the ARB is broken. Now you know he was right. Lisa grabs a printout. "This is the S&P futures depth," she says. "Look, no bids within 10 handles. 10! Her voice cracks on the last word. "We're not just falling. We're falling into air." You reach for a trade. A client wants to exit Johnson & Johnson, safe stock, solid company. You glance at the board. It's down 15%. You hesitate. Then you call the desk. They tell you they'll try. That's all. No promises. Tommy shakes his head. "J&J? Come on, this isn't real." He sounds offended. "People are selling J&J." He laughs, nervously. But you see the sweat on his neck. Charlie walks by and mutters, "They're not selling J&J. They're selling everything. That's what machines do. They don't discriminate. They just liquidate." You hear someone scream across the floor. A block of IBM, 100,000 shares, just got filled 5 points below the last trade. That wasn't the market, the broker yells. That's theft. But no one responds. It was the market, just one that's moving faster than anyone can keep up with. A clerk drops a ticket on your desk. It's time-stamped 9:44. It's 10:05 now. You ask where it came from. He shrugs. Backlog. You stare at it. A trade that was valid 20 minutes ago is already outdated. You consider tossing it, but you can't. Compliance still expects reconciliation. Charlie sits down. That alone is shocking. He never sits during open. He pulls out a cigarette, lights it with trembling hands. There's no strategy now, he says. It's all one trade. Everyone hitting the eject button at once. You glance back at Lisa. She's red-faced, her headset askew, frantically trying to untangle a rejected block. They didn't clear it, she says. Said the price moved too fast. We're gonna get stuck with the whole thing. She looks at you, eyes wide. We're the bag holders now. Reggie walks over, blinking hard. Are we technically still solvent? You stare at him. It's not a joke. He's serious. You realize he doesn't know how the firm holds capital during events like this. None of the young guys do. It's never mattered. Until now. Tommy places another trade. A long position this time. Fade the fear, he whispers. But his voice lacks the old cockiness. He checks the screen, frowns. His fill comes through 30 points lower than expected. That can't be right, he says, quiet. That's not what I clicked. You don't say it out loud, but you think it. It is now. The Dow is down 250 points. And it's not even 10:30. You close your eyes for a second, just a second. The roar of the pit fades behind your temples. You breathe once, deeply. The air smells like sweat, ozone, and fear. You open your eyes again. And get ready for what comes next. The sound of the ticker machine used to be a comfort. Rhythmic, mechanical, like the heartbeat of the market. But now, it's trailing the action badly. You glance at the overhead screen, a trade prints, then another. But you saw those prices 20 minutes ago, maybe more. Lisa notices it first. This print's from 9:55, she says, pointing at a quote for AT&T. It just hit now. Her voice is flat, detached, like someone reporting a delayed flight, not a structural market failure. We're flying blind, she adds. No one argues. By 10:45 a.m., the ticker is over 90 minutes behind. It's a lagging ghost, no longer telling the story of the market, just echoing it. Clients are calling for prices, and all you can give them are approximations. Your screens lie. The tape lies. The whole floor is an illusion, stitched together with flickering data and guesswork. Charlie looks like he's aged 5 years since the bell. He's rubbing his eyes, muttering to himself. You can't manage risk with no reference point. There's no price discovery, no midpoint, just noise. He slaps the desk and points to the futures board. They're 30 points apart again, cash and futures. No one can close that gap. Arbitrageurs, the ones who used to keep the markets tethered, are gone, stepped back, shut down. Some left their posts hours ago. You heard one firm in Chicago walked away entirely. Can't hedge without liquidity. Can't make two-sided markets without confidence. And right now, there is no confidence. Just movement. Hank walks the perimeter, lips tight, jaw set. You know what he's doing. Watching for traders who break under pressure. He's seen it before. Maybe not at this scale, but he knows what a market death spiral looks like. He's seen traders freeze, blow up, or worse, walk out and never come back. Reggie finally speaks. How delayed is too delayed, he asks, not to anyone in particular. Is there a threshold? Lisa stares at him. The threshold was 200 points ago, she says. You're watching the wreckage now. You try to call Chicago again, just to get a sense of what's real. No answer. Not even a busy signal. Just dead air. You hang up and check your positions. Most of them are now theoretical. You haven't had a clean fill in 30 minutes. Tommy paces near the rail. He's stopped trading. At least for now. He's pale, confused. This isn't trading, he mutters. This is chaos theory. This is math gone wrong. He's not wrong. The models never predicted this kind of volatility. They assumed liquidity. They assumed rational actors. But today, there are no rational actors. At 11 o'clock, a massive block order hits the floor. Some institutional fund, probably pension money, trying to exit all at once. 500,000 shares of Dow components, market order. The floor can't handle it. Prices gap down instantly. Multiple stocks drop 10 to 15% in seconds. You hear someone scream, not out of pain, just disbelief. We just lost 30 billion in market cap in a minute, Charlie says, eyes on the board. And it didn't even make a sound. Your phone rings. Finally. It's the West Coast desk. Their morning just started. What the hell is going on out there? They ask. You hesitate, then say, don't open. It's not advice, it's a warning. Lisa slams her phone down and looks around. I just had a client ask if their portfolio still exists, she says. Not how much it's down, if it's down, she exhales. And I didn't know what to tell them. The screens flicker again. Another round of prints comes through. Late, distorted, detached from reality. You're watching a delayed transmission of an ongoing disaster, like listening to the Titanic's radio while standing on the dock. Reggie walks up to Hank. Should we report this to the SEC? He asks quietly. Hank stares straight ahead. Report what? That the system's running exactly as it was built? That the math did what the math was supposed to do? Tell me what rule we broke. He's right. There were no hacks, no fraud. Just leverage, automation, and a unified sell trigger. The market isn't broken, it's exposed. Charlie starts drawing something again, a jagged V on yellow paper. This is the first half, he says. The fall, the panic. Then he stops. But what if there's no second half? What if there's no bounce? You look at the board. The Dow is down 350. Still no bounce. A few feet away, a junior runner, maybe 20 years old, is holding a trade slip and shaking. He doesn't know where to take it. He doesn't know if it's still valid. Lisa gently takes it from his hand and files it without comment. Reggie whispers to no one in particular, we're witnessing a rupture in confidence. He writes it on his clipboard, then pauses, then underlines it. You look around the floor. Phones ring, quotes blur, the ticker stutters behind reality, and the market, the real market, is moving without you. You glance at the clock. It's barely past noon, but it feels like the day's already been lived twice. The floor is quieter now. Not calmer, just drained. Traders speak in clipped sentences. Some lean against their desks like they're bracing for an earthquake. Others don't speak at all. Lisa finally takes off her headset. Her hands are cramped from gripping the phones. She stretches them slowly, one knuckle at a time. There's nothing coming in, she says. Not bids, not calls, just silence. You both know that's worse than panic. Panic at least comes with noise. The Dow is down over 400 points. No pause, no announcement, no circuit breaker. You think back to all those articles about market stability, all the so-called fail-safes and volatility cushions, but none of them apply here. They're ideas on paper, not rules, just suggestions, just hope. Charlie tears a paper tape from the machine. Still no freeze, he mutters. Still no floor. He draws a sharp line downward with a red pen and circles the base. We're in free fall. He taps it once, and no one's reaching for the parachute. In theory, the NYSE could halt trading, but it's not automatic. There's no threshold, no hard trigger. It's at the discretion of the exchange, and they haven't used it. Maybe they're afraid. Maybe they think halting the market would confirm how bad it really is. You remember the last firm memo you read on market breaks, a 2-pager from legal, outlining possible coordinated pause mechanisms. Possible, not binding. Just ink on a forgotten desk. Tommy stands at his post, his tie loosened. He hasn't spoken in a while. He finally turns and asks, "Why hasn't the Fed stepped in?" Lisa answers without looking up, because they can't stop a software cascade with a press release. You feel it now, the broader realization setting in. This isn't about fear anymore. This is about structure. Every trade executed by a machine triggers 10 more, each chasing liquidity that no longer exists. Everyone hedged against the same risk, using the same models, and now everyone's running through the same door. Charlie leans back in his chair. "Portfolio insurance," he says bitterly. "A fire drill that set the whole building on fire." Reggie approaches, hesitant. "I'm hearing chatter about the exchange considering a coordinated halt." He flips through his clipboard. "But the chairman doesn't want to, quote, interfere with natural price discovery," Charlie scoffs. "What price? There's nothing natural about this." You look at the board again. GE down 22%. IBM down 19%. McDonald's down 18%. These are stable companies. Decades of earnings, global footprints. And they're being sold like penny stocks in a panic. A voice cuts through the floor. 12-handle print on AT&T. A second later, someone confirms it. Then a third trader shakes their head. "No bid now. It's not a price war anymore. It's an abandonment." Lisa slams a printout on her desk. "We just got an institutional dump of Pfizer. 500,000 shares. No counter." She looks around. No broker wants it. No one. Then, softer, "We're not a market. We're a liquidation site." Your phone rings. A voice from upstairs. One of the risk guys. "Do you have exposure to the quant desks?" You tell him yes, of course. Everyone does. He sighs. "They're blowing up. One of them was 12x leveraged on SPX hedges. Now they're getting margin called on negative ticks." You close your eyes for a moment and picture it. A domino effect. Synthetic protection collapsing in sequence. Every protection layer. The futures, the derivatives, the options overlays. All of it is turning against the owners. Not hedging anymore. Accelerating the damage. Tommy speaks again. "This isn't fair," he says, as if fairness has any place here. "This was never supposed to happen in peacetime." Charlie walks past him without stopping. Markets don't care about fairness, they care about flow. And today, the flow is death. A junior trader at the far post vomits into a wastebasket. Nobody even reacts. You hear someone whisper that Goldman's ARB desk has shut down. Rumors, maybe, but they feel true. Everyone's pulling risk. Everyone's turning off the machines. The problem is, the machines already left the building. Reggie looks pale. "If we hit 500 down," he doesn't finish the sentence. Lisa does it for him. "Then we'll break something else." You hear a bell sound. Not the closing bell, just an internal alert. An emergency risk threshold has been breached on a major desk. You don't know which one, but it doesn't matter. You know what it means. Forced liquidation. At 12:22 p.m., the Dow drops below 450 points down. A trader yells for confirmation. Another shouts, "Check your books." Phones ring again, briefly, then die. It's like watching a city lose power grid by grid. Hank walks over and looks at your desk. He says nothing, just rests a hand on your shoulder for half a second. Then he's gone. You realize your hands are shaking, not from fear, from exhaustion. Charlie leans in. If this keeps up, they'll have to shut us down. You want to agree, but you've lost faith that anyone's at the switch. The air on the floor feels different now. It's heavier, stiller, as if everyone's waiting for something to break, not just in the market, but in themselves. You hear fewer shouts, fewer trades. There's a kind of collective suspension, like breath held too long. The Dow passes 500 points down. That number has no precedent. It's not just a figure, it's a signal, a line crossed. Even the veterans, the ones who thought they'd seen it all, go quiet. You catch Hank gripping the rail with white knuckles. His jaw is tight, eyes unreadable. Lisa has gone cold, efficient, robotic. She no longer reacts to client panic. She just confirms orders and hangs up. That's the fifth full liquidation in 20 minutes, she tells you. They're not reallocating, they're leaving. Charlie returns from a quick walk to the bathroom. Lines outside the compliance office, he says. Risk managers, assistants, even legal. He shakes his head. One guy was crying, just standing there crying, saying, "I didn't know, I didn't know." You ask him what that means. He shrugs. Could be leverage. Could be pension exposure. Could be nothing. But nothing feels small today. You check your screen. GE is down over 30%. That's not just a discount. That's forced selling. Some funds must be dumping blue chips for margin calls. And when the bluest chips fall, there's nothing left to rotate into. Tommy comes over and looks at your screen. GE was my first stock, he says. Bought it in '82. Thought I was a genius. He points at the chart. You know what that looks like? You nod. Yeah, a heart monitor. Flatlining. A runner brings you a printout from Chicago. The S&P futures market is now officially trading on air. Bid/ask spread so wide they barely qualify as markets. Liquidity providers have pulled out, execution desks are rationing volume, and worst of all, no sign of a buyer large enough to matter. Reggie is pacing now. He's trying to call someone at the Fed. No one answers. They don't know what to say, he mutters. They don't know if stepping in will help or make it worse. Charlie steps in beside him. The Fed can't buy the S&P, he says. They don't even have that tool. The only buyer left is us. He pauses. And we're all too scared. Lisa rips a fax off the machine. Someone's compliance department is restricting all client redemptions. She reads it aloud. Temporary trading halt on redemptions to protect long-term investors. Then she laughs, bitter and exhausted. The only people left are long-term. The rest are already gone. At 1:12 p.m., the Dow drops to minus 508. It's not a headline yet, but everyone on the floor knows it. You feel it in your ribs. That number, 508, will be remembered. Not for its magnitude alone, but for what it represents. That nobody was in control. Hank calls for a brief stand down. No more fast quotes, he says. If you give a number, you honor it. He locks eyes with every senior broker. No more games. Everyone nods. But it's a formality. The game is over. Tommy returns, holding a crumpled notepad. I wrote down all the trades I couldn't fill, he says. Not to record them, just so I could remember what normal used to feel like. He looks down at the list. I don't think any of these prices are real anymore. Charlie walks to the board and draws a big circle around the last hour's trades. Look, he says, this isn't a curve, this is a cliff. Reggie approaches your desk. He's not holding his clipboard anymore, just standing there. If we get a margin cascade at 2 p.m., he says slowly, I don't know what the floor will look like by close. You don't respond, you don't need to. A fax chimes again. Another fund liquidating. Another firm hitting risk limits. Lisa doesn't even glance at it. She just throws it on the growing stack beside her. There's nothing left to hedge, she says quietly. There's nothing left to protect. Tommy lowers his voice. You think they'll shut it down? You look at him. Who? The exchange, the Fed, anyone. You shake your head. No one wants to own that decision, Lisa whispers, and no one wants to be the last bid. Charlie steps outside for a cigarette. He returns with wide eyes. Did you see outside? You shake your head. Reporters, he says. Dozens of them. Cameras, vans. The kind of crowd that shows up when a building collapses. Tommy swears under his breath. The Dow creeps lower. 511. Then 516. You sit back in your chair, eyes scanning 1,000 data points that no longer mean anything. And that's when the bell rings again. Not the closing bell, not yet, but another internal alarm. An institutional sell order, the size of a small nation's GDP, just hit the wire. And it's not the last. You used to think of a margin call as a one-time event. A phone call, a deadline, a wire transfer. But today, it feels like a drumbeat. Steady, relentless, each thud triggering another collapse. It starts small. A runner delivers a note to Lisa. Her face doesn't change as she reads it, but you notice her hand tighten. Margin violation, she says. One of our oldest clients. No way they cover that size. She places the paper gently in the tray, as if handling something radioactive. Minutes later, another, then another. By 1:45 p.m., they're coming faster than trade slips, portfolio after portfolio breaching thresholds, entire books, underwater and unrecoverable. Not because of wild speculation, but because the models never accounted for this kind of velocity. Charlie slides a yellow legal pad your way. It shows a crude chart, price on one axis, time on the other. He's drawn a diagonal drop, then a sharp vertical line downward. That's where the margin calls start, he says. That's where fundamentals stop mattering. You look at the ticker, not that it helps anymore. The Dow is hovering around minus 530. It ticks lower in jagged stabs, never recovering. No V-shape, no snapback, just bleeding. Tommy slaps the desk. What the hell is left to sell, he mutters. They've dumped every large cap, every index, even bonds are shaky now. He points to a print. Who sells Coca-Cola in a panic? Who sells Procter & Gamble? He answers his own question. People who don't have a choice. A call comes in from upstairs. It's brief, quiet. The risk team has pulled the plug on several internal trading programs. Too much exposure, the voice says. Shut them off. You glance over at Reggie. He already knows. We've got models screaming, buy, he says. But we're not allowed to touch a thing. That's the paradox of a crash. The moment when value is most obvious, when blue chips are trading at fire sale prices, is the same moment when no one is allowed to act. Capital freezes. Governance takes over. Lisa is on the phone with a client who's still in disbelief. Yes, she says slowly, your account was margined against equity value. No, the current prices don't support it. Yes, we had to sell. A pause. No, sir, there's no reversal. You hear the silence on the other end, even without speakerphone. Across the room, Charlie watches the options board flicker. Implied vols are through the roof, he says. Pricing's broken. No one can calculate fair value anymore. The market doesn't know how scared it is. A new trader, maybe hired 6 months ago, stands frozen beside a screen. He's holding a sheet of ticked data like it's written in another language. You remember that feeling, the first time the market moved faster than your training, faster than your instincts. You walk over and gently take it from him. Breathe, you say. Just breathe. At 2:07 p.m., the first real whispers of counterparty risk begin. Not just price risk, but trust. Did Bank X settle their trades? What's the clearing risk with Fund Y? In times of panic, every institution becomes a suspect, and rumors move faster than facts. Reggie walks up and pulls you aside. We might have indirect exposure to one of the firms rumored to be defaulting. You raise an eyebrow. How? He shrugs. Structured product. Tranches. I don't even know what we own anymore. That's the scariest sentence on the floor. Tommy leans over a screen and stares at a quote for Boeing. They just filled a 100,000 share order 5 points below the last bid, he says. That's not trading. That's execution triage. A clerk rushes in from another floor. A firm just defaulted on margin, he shouts. Don't know which one. Might be overseas. Hank appears from the corner, his voice sharp. No unconfirmed chatter on the floor. We trade what's in front of us. But the damage is already done. By 2:15 p.m., the concept of price has started to fracture. Stocks are printing in ranges so wide, traders can't orient. The bid-ask spread on major names stretches like pulled taffy. $110 by $96. You've never seen a gap like that. Charlie watches the futures board again. The S&P pit is toast, he mutters. They're trading in eighths and hoping no one calls their bluff. Lisa sighs and slumps in her chair. This isn't what I trained for, she says. This isn't even finance anymore. You know what she means. This feels less like a market and more like a clearing operation, like cleaning up after a flood, only the water's still rising. Tommy walks over. We're just trying to get to the close, he says. There's no playbook for recovery. There's just survival. You nod, but inside, you wonder, what happens at the close? The phones ring again, clients begging to know when it will stop. Reggie says what everyone else is thinking, when there's nothing left to sell. You realize he might be right. The final hour used to mean something. It was where battles were fought, the late-day reversals, the end-of-session heroics, the big prints that turned a red day green. But today the final hour is just an endpoint, a finishing line for a marathon no one meant to run. You don't feel like a trader anymore. You feel like a witness. The Dow is down more than 550 points now. That number used to be unthinkable, mathematically implausible, but no one talks about numbers anymore. The only thing that matters now is whether we make it to the close without total breakdown. Lisa's phone is off the hook, not by accident. She placed it that way, and no one's asked her to put it back. Her eyes are red but dry. She stares through the board, not at it. Like someone remembering a dream they can't explain. Charlie doesn't say much either. Just sits with his head in his hands, scribbling patterns that don't mean anything anymore. Technicals are useless. Ratios, levels, moving averages. All of it burned in the fire. He draws a circle around the day's move and writes one word beneath it. Reset. Reggie returns from the mezzanine. The execs are already planning statements, he mutters, trying to draft something that sounds like leadership. He doesn't smile. I hope someone tells them that the market doesn't read press releases. Tommy has stopped trading, he just watches. Every now and then, he reaches for a quote but pulls his hand back. "What's the point?" he says. "I can't price anything. I can't hedge. I can't even explain what we're looking at." He turns to you. "This isn't selling. This is surrender." You look around the room. It's quieter than it's been all day. Not peaceful, just drained. Like an ER after a mass casualty. No shouting, no beeping machines, just the soft shuffle of exhausted people doing their best. At 2:42 p.m., the overhead screen glitches. Just for a second, a flicker. But in that instant, your chest tightens. If the board goes dark now, you're not sure anyone here knows what to do. Lisa finally speaks. "We used to joke that one day we'd see something like this," she says. "A down 20% day, like it was a unicorn." She looks up and her voice hardens. "Well, here it is." Charlie folds his pad shut. "It's not just the losses," he says. "It's the faith. It's watching people stop believing that this thing works." The market was always built on confidence. Confidence that there'd be a buyer, that someone would make a market, that rules would hold, that systems would buffer the shocks. But today, confidence was the first thing to go. "Hey," Reggie returns with a sheet from compliance. "Legal wants a list of all trades that failed to execute within margin parameters," he says. "They're expecting lawsuits. You don't even respond. There will be lawsuits, investigations, memoirs, and documentaries. But right now there is only survival." 2:57 p.m. The Dow ticks to minus 570. No one flinches. It's just another number now, another mile marker on a road with no map. Tommy whispers if we're lucky, the system holds together for 33 more minutes. He doesn't finish the thought. He doesn't have to. Everyone knows what happens if it doesn't. The floor smells like old coffee and cold sweat. The energy drinks are gone. The bagel's half-eaten. Someone left a sandwich on the copier. No one cares. Charlie walks over with a note. "Chicago's back online," he says. "Just sent a block bid through. It didn't move the market." He laughs. Not with humor, but resignation. Nothing does anymore. You catch Hank leaning on the railing. He's been in this business for 30 years. Worked the floor during Nixon. Watched the oil embargo. Traded through 73. But you've never seen him look like this. His suit is wrinkled, his eyes dark. He looks not older, just finished. Lisa reaches for her Rolodex and pulls out a single card. She stares at it, then tears it in half. "It was a broker we used to work with," she says. "Retired last year. He'd be dead today if he stayed." Charlie starts packing up some of his things, not out of panic, just inertia. He folds his chart, puts away his pen, wipes off his screen. Whatever happens in the last half hour, he says, isn't going to change what this day already means. And that's when the board flickers again. Another big order hits the tape. It scrolls fast. 300,000 shares of mixed blue chips sold. Market order, no counter, no delay, just gone. Someone gasps. The Dow drops to minus 583. And still, there's no bottom. With less than 30 minutes to go, time begins to bend. You glance at the clock and expect it to move faster, to leap ahead, pull you toward the close, but it doesn't. The hands barely move. Every minute stretches like taffy, soft and slow, as if the market itself is reluctant to reach the end. The Dow hovers near minus 590. It's not the number anymore that stings. It's the symbolism. This is now the worst day in Wall Street history, by points, by velocity, by psychological rupture. There's no longer an edge to defend or a chart to reference. The only thing left is the ritual of the close. Lisa opens her drawer and pulls out a tissue. Not for her. She hasn't cried, but for her desk. She wipes away a thin line of coffee that's been sitting there all day. Cleaning up, preparing for nothing. You want to say something, but what's there left? Tommy hasn't moved in 10 minutes. He just stares at the floor, his fingers twitching slightly, like he's still trading in a dream. Charlie leans over his desk and writes a sentence on the back of a fact sheet. There was no bottom, only silence. He tears the sheet, folds it, puts it in his coat pocket. Reggie returns from one last risk meeting. No bailout, he says. No coordinated Fed statement. No trading halt. They're letting it close on its own. His voice isn't angry. It's not even surprised. Just tired. You hear a voice on the floor, deep, calm, announcing the final half-hour volume estimates. Record-setting flows, he says. Record-setting declines. His words drift off into the stale air, unanswered. At 3:41 p.m., the Dow prints minus 601. Nobody shouts. No one gasps. No one runs. There's no shock left in the room. Just resignation. The phones are quiet. Not dead. Just resting. Like everyone ran out of things to say. Or stopped wanting to know the answer. Lisa picks up a slip from the printer. Client sold every last holding, she says. They're exiting equities altogether. Said it's just gambling with suits. Charlie mutters, "They're not wrong today." Tommy finally speaks. "This is gonna change things, right?" he says. "Like, for real?" He doesn't direct the question to anyone. It's like he's speaking to the floor itself. The room doesn't answer. Because it already has. Every trader here has just learned that the market doesn't have a floor. Not a real one. Not when everyone panics at once. Not when the selling feeds itself. Not when the very architecture of protection turns against the system. At 3:52 p.m., the board flickers again, but this time it holds. The tape is running. The quotes are real. Barely. The spreads are still ridiculous. The trade's hesitant. But there's movement. A heartbeat. Weak, but steady. Charlie watches a final round of block prints on a few high-volume names. These are just end-of-day rebalances, he says. Nobody's buying this dip, he shakes his head. Nobody's that brave. Lisa slides a chart toward you. It's not even labeled, just a jagged downward plunge in red ink. The kind of chart that gets printed in newspapers, that shows up in textbooks. That's us, she says. That's today. You think back to the start of the day, that surreal quiet before the open, the tension, the hope it might be a recovery. And now you're here, at the bottom. The wreckage still warm. Hank steps forward. He's not holding a clipboard anymore, just a cup of water. He taps it against the rail like a judge with a gavel. 90 seconds, he says. That's all we've got left. Charlie pulls out a pen and scratches a final note into his ledger. You look around and realize no one is talking anymore. They're all just waiting. At 3:59 p.m., the floor holds its breath. No one moves. No one speaks. 1,000 minds converge on the same thought. Let it be over. And then, the bell. Not a dramatic clang, not cinematic, just the same sound it's always been. But today, it echoes like a cannon. Traders lower their heads. Phones are hung up. Screens go black, not with power loss, but with purpose. There's nothing left to price. The market is closed. The Dow ends the day at minus 508.32. You exhale, not with relief, but with fatigue. Lisa stands up and straightens her blazer. That's it, she says. We lived through it. Then quieter, we'll never be the same. Charlie tosses his pen on the desk. They're gonna call this the crash of '87, he says. But that's too neat, too short, he gestures toward the room. This wasn't a crash, this was exposure. Tommy finally laughs. The kind of laugh you get when you don't know what else to do. We all just got undressed in public, he says. Reggie folds his papers and looks at you. You staying late? You shake your head. No trades to unwind. No P&L to reconcile. Just ghosts. You walk toward the exit. The lights overhead dim slightly as the floor empties. Not off, just lowered. Like the market itself is trying to sleep. Trying to forget. You reach the glass door and pause. Behind you, the boards are dark. The tape is still. The room, for the first time all day, feels calm. And that's when it hits you. This was the easy part. Tomorrow, when the headlines drop, when the clients call, when the world starts pointing fingers, tomorrow is when the real work begins. But for now, silence. You wake up before the sun. Your body didn't sleep much, not really. You closed your eyes, sure, you lay in the dark. But rest? That's something different. What you did was float. Somewhere between exhaustion and numbness, between memory and dread. Your shoes are still by the door. You put them on like a soldier putting on boots after battle. No rush, no emotion, just necessity. Outside, the streets are quieter than usual. Not empty. New York never is, but subdued. People walk with purpose, heads down. Not in mourning exactly, but there's a new weight in the air. Something has shifted, even if no one has the words for it yet. You arrive at the building. Security doesn't say anything, but they nod with a little more gravity than before, as if everyone who walks through these doors today is part of some unspoken fraternity. On the elevator, someone clears their throat. Someone else just stares ahead. No jokes, no news tickers, just a quiet ascent. The floor doesn't look damaged, but it feels different. Like a church after a funeral. Nothing broken, yet something missing. The silence isn't total. Phones still ring, printers still hum, but it's the silence between those sounds that stands out. Charlie's already there. He's reading the Wall Street Journal. The headline stretches across the page like a tombstone. Wall Street's darkest day. He folds the paper slowly and sets it down. It's official now, he says. We're history. Lisa is by the coffee machine. She pours 2 cups, hands you one without a word. Her blazer is pressed, her eyes sharp. But she's quieter, like someone who's decided that noise is no longer worth it. Tommy walks in late. He doesn't apologize, doesn't need to. Everyone's on a different clock now. You gather near the board. The Dow futures are green, barely. A technical bounce, maybe, or muscle memory. Or denial. Either way, no one believes it yet. Charlie finally speaks. You think this is over? You shake your head. Not even close. Because the real impact of a crash doesn't show up in charts. It shows up in behavior, in trust, in the thousands of decisions made in quiet rooms. Portfolios adjusted, risks repriced, dreams postponed. Reggie enters, holding a stack of typed memos. Compliance is rolling out new guardrails, he says. New margin rules, volatility triggers, emergency circuit breakers. He shrugs. Stable doors, horses gone. You sit down and log in. The screens flicker to life, quotes scroll, charts populate. It looks like yesterday, but it's not. The architecture is the same, but the foundation feels cracked. Lisa hands you a note from a client. It's handwritten. That alone makes it feel rare. It says, I lost everything, but I don't blame you. Just tell me if there's still a way forward. You reread it twice, then fold it and slide it into your drawer. Charlie's running numbers. He's trying to rebuild a model that fits what just happened. But you both know it's impossible. Models are based on patterns. This wasn't a pattern. This was a rupture. Tommy pulls up his trade log. We didn't just get wiped out, he says. We got seen. He leans back. The market showed us what it really is. Reggie walks by again. Press wants statements. They're asking if this was a one-day event or the start of a recession. You don't have an answer. No one does. And anyone who claims they do, you know better now than to trust them. At noon, someone brings lunch, sandwiches, the kind no one ordered, but everyone accepts. Eating isn't about hunger today. It's about ritual, about pretending things are returning to normal. You look at Lisa and finally ask, why are we even here today? She doesn't blink. Because showing up is the job. Charlie agrees. Markets don't stop, that's the rule. He pauses. Even if we wish they did. Later that afternoon, Hank returns from a closed-door session with senior leadership. There's talk of a presidential address, he says. And the Fed's hinting at liquidity support, he offers a grim smile. Everyone wants to look like they knew what they were doing all along. The hours pass, slow and soft. Some clients call back, some don't. Some screens light up with trades, cautious, small. Tommy places his first order of the day, a tiny position in Johnson & Johnson. He doesn't say anything, but you can tell. It's symbolic, a toe in the water, not hope, just motion. Charlie updates his chalkboard. He writes a single word in the corner. Tuesday. It's not much, but it's a start. Lisa opens a new ledger, not a replacement, a continuation. She titles the first page, Post-Crash, Notes Worth Remembering. At 4 p.m., the bell rings again. Not like yesterday. Today, it feels almost human. You stand there for a moment after it fades. The board's quiet. The phones settle. You breathe in, then out. You're still here. Later, as you leave the building, the street feels a little lighter, not healed, but open. A man in a suit passes you and says, "Wild week, huh?" You nod. It's only Tuesday.